And Julia, just firstly, your thoughts on the session today?
James, a really good session on the market today, and in particular we saw the energy sector, the material sector and the consumer sectors outperforming. And this is unusual because these are the three sectors which have underperformed in 2015. So we saw a reversal of the trends that have dominated in the past year to date, and it's been the healthcare space, the industrial and the property sectors which have underperformed today. In fact, some fantastic performances from those underperformers for the year. Woolworths was almost up 3% on the market, so up by 2.9%. BHP was up by 2.4%, and Woodside Petroleum managed a gain of 2.1%. Now, the material sector was due for a bounce. I remember speaking to you on Monday, James, about BHP Billiton and the material space, which was looking oversold, and that a lot of traders were looking to trade and buy in at 25 and sell at 30. I guess I was one of those traders getting in, so a big smile on my face, and we are seeing a rebound, I think a technical rebound in terms of these stocks, as well as some of the underlying commodities as well. Iron ore prices had a massive overnight session, up by a massive 4.6%, up 25.3% in the last three sessions. So that's having a good flow and effect for the stocks. But altogether, I think the market is still focused on two key issues. One is China and the stabilisation that we have seen in the very short term there, and hopefully the medium term. So that's giving the markets a little bit of confidence. And secondly is what's happening in terms of the US. We saw the results of the FOMC meeting coming out overnight, and the markets had been thinking about a September rate hike, but it looks like after that meeting, those expectations have been pushed out to a December rate hike. And of course, that was great news for risk assets overnight. We saw the markets rallying, commodities rallying, and it was really buy risk, which we saw continuing in the Asian session today.
And so, Julia, a couple of days of decent gains. Do you see that continuing into the next week?
I think it's going to be a little bit more difficult for the Australian market next week, and I think next week will be focused a lot more domestically because we do kick off earnings season. So a lot of it is going to be around some of the news coming out in regards to earnings season. And I guess the markets, in terms of the US, we've seen that FOMC meeting now. Those expectations around interest rates are clearly in the market, and as long as we don't see too much volatility in terms of China, I think Australian investors are very much going to be focused in on what's happening domestically, especially with Australian companies, and not so much what's happened in the past year, but more the outlook statements for the next financial year.
Yeah, Martin, just interesting to speculate how markets will react when the Fed finally does increase interest rates, because no one, as Martin suggests, can claim to be in any way unaware of them lifting rates. It's been well telegraphed.
It has been well telegraphed, and I think there's two camps out there, which is why there's still some undecisiveness in the market. One is that we will see the Federal Reserve continue to raise interest rates. The other is that we'll see the Federal Reserve raise the interest rates maybe once, but perhaps no further than that. So I think there's a little bit of a divergence in whether or not the Fed is going to have the ability, and whether the US economy and markets are strong enough to absorb that, despite the intentions being well telegraphed. I mean, if we have a look at how markets rallied overnight, the markets had been really pricing in that September rate hike, but with the dual mandates of employment and inflation really not where the US Central Bank want it to be, the markets are now betting on a December rate hike, and the fact that it is a little bit later meant that it was buy risk, and we saw that continuing in the Asian session today. So I think the markets are very interest rate sensitive. They know that the US is planning to raise interest rates, but the later that the US leaves it, of course, the more positive that's going to be for the market.
A bit of corporate news out as well today, Julia. Just firstly, GUD Holdings, great day in terms of share price performance. Did the numbers justify the good gains?
Look, I think the actual results were in on expectations. From memory, GUD's guidance was for underlying EBIT between $55 to $60 million. They came in at $59 million, so within the expectations which the company had set out. Now, the profit line, it was up by 88%, but that's because last year there were some restructuring costs involved. But I think what the market really got excited about was the current financial year. What we saw at the tail end of the last financial year were some new products coming to the market, in particular in relation to that JV with Jardine, which meant that some of those new products were hitting the market. There was some strong sales momentum there, especially with its Oster blender, which seems to be going quite well. And the effects of that really are going to be felt until the current financial year, FY16. So it's that forward outlook which has the market excited, and the share's doing extremely well today, up by 10.9%. So great that the sales momentum is there. On the negative side, this is a company that is outsourcing its products now, so that weaker Australian dollar is actually a negative, but they seem to be doing a lot in terms of cost out, and the savings that they're achieving in their business more than making up for that.
Marcin,